Okay, welcome back to Finance Bros. Today it's gonna be a bonus episode, unscripted, live, candid. Anyway, we want to bring this to the front, which is really about this thing called basic financial planning. I think there's a lot of financial planning advisors out there.
Right.
If you Google it, you find any social media, there's so many people talking about different things at the same time. So it's very hard for people to understand really, are they doing it the right way? Are they following the right track? So what has MAS together with Association of Banks of Singapore and the Association of Financial Advisors, Life Insurance Association, had came up with is that they come out and develop with a basic financial planning guide.
Right.
And we're going to basically flash this to further discuss and elaborate a little bit more. So let's take a look at the basic financial planning guide. Yeah. So as you can see at the right, at the top, the key needs are actually cut into a few areas. The first one is emergency fund, followed by protection, investments, and legacy planning. So let us zoom into emergency fund for a start. The rule of thumb, like anywhere you can find online, they can always tell you 3 to 6 months worth of expenditures. But of course, today things have changed a little.
Right.
I think so. And
Right.
especially during pandemic, a lot of people who were affected by the pandemic, particularly F&B, retail, your travel, basically all your tourism board businesses. When they got affected, then they realized that, it could really be a 1 year or more kind of down. So I think as things have developed until this point, many people have understood that maybe 6 months in some cases may really not be sufficient. Well, this is a basic financial planning guide. It's really the basic. So you really have to understand the word called basic, and it's case to case. And so of course, what can we do to safeguard that risk is like what they say. You can consider keeping money in a combination of savings account, fixed deposits if you want, Singapore savings bonds.
Right.
Yeah.
I think it's like what Jimmy mentioned, it's really case-to-case basis, and whether you're a salaried employee or you're self-employed or you're a boss of a company or you're a sole proprietor, I think all this varies really differently. Yeah, especially on the self-employed and the part, right, about self-employed. I think because we are self-employed ourselves, and when we usually talk to people who are also self-employed, we realize that in terms of financial planning, that portion in terms of emergency funds especially, it's not really well taken care of. Especially we have friends who just sole proprietor, like electrician, is just simple job. But they do not differentiate their account from their own savings account as well as their business account. And this is really, really scary as a financial planning point of view, because you might spend a lot on your personal account because of your daughter's educations, all the different daily expenses, and then you have your business expenses again. And usually when this happens, and when you need to pay your workers or that, and you realize that your account doesn't have much money, or if let's say maybe one of the owners or one of the people who fail to pay you according on time, then you will meet some trouble. So for in terms of that profile, maybe your emergency funds will need to go a little bit higher, maybe to 1 year or 1+ year, so that you still can keep afloat on all that.
Yep.
Yeah.
There are also instances where you hear people saying things like, "Oh, I'm in a very iron rice bowl sort of industry. No, I'm a teacher,
Right.
I'm a public servant. Hey, I can never go out of job, man. Then why is there a need for me to keep so much cash?"
I used to think of it that way. Okay, but I think that in this society, there's no things such as iron rice bowl. Yeah, this is my personal opinion. So a lot of things will change. Maybe, at some milestone in life, you decided that I want to set up a family. And then you decided that I don't want to work anymore because I want to take care of my kids, to make sure that the foundation of their years is really taken care of. And I might stop working for 3 to 4 years at least. And then this might be a trouble to a partner.
Or you get into a scandal, you're very affected. Or do they cancel culture game strong? You say something you shouldn't be saying online, you get cancelled. So then therefore the emergency funds come handy, right?
That's right.
Yep. Okay, so I think it's important to not just look at the involuntary kind of uncertainty.
Right.
There are a lot of people in today's context. People are very blessed today. So there are people who I've heard many times saying things like, "I want to go sabbatical for 6 months."
And so
when
common
you
right now also.
sabbatical is unpaid, right? You maximum apply your leave, and then you throw in a couple more MC possibly, but then you probably have to still take a lot of unpaid leaves. So a lot of people want to make sure that they have enough savings to be able to do that. Yeah.
Right.
So next up, we want to talk about protection. So here it says obtain insurance protection for death, total permanent disability of up to 9 times of your annual income, and critical illness up to 4 times of your annual income. And again, I'll have to stress hardly on this again. This is basic financial planning guide. If you'd like to be more comprehensive, things will be very different. And of course, we advise to speak to one of us and financial advisor out there so that they can actually guide you further. And of course, you want to also familiarize with the national schemes such as your MediShield Life for your healthcare bills, and also things like your CareShield Life or ElderShield for long-term care in case of severe disability. So they talk about spending at least, not at least, at most 15% of your income on the insurance protection. And they also have asterisk. So asterisk says that purchase of bundled products such as whole life insurance may exceed 15% of income as they contain both investment and protection elements. So I think this is very key and important because really depending on when you start your planning, if you start it at a much later time, you might burst a number lah.
Yep.
Yeah.
Yep. And I think the schemes, especially all the life, the MediShield Life, CareShield Life, ElderShield Life, all that are quite complicated. You know, people used to mix up MediShield Life and MediSave. Yeah. They always say these two terms differently. And I think it's very important to really know what you have, and you have to review it with a professional, especially whether is it enough. And in terms of insurance protection, I find that this is the part that we need to know how much we need at least. Whether you want to do more or you want to do just enough, it's up to you. Okay. And I think another question that always posed to us is that if let's say I'm a high income earner, do I really need so much for critical illness? If let's say I earn 500,000 a year, do I really need $2 million for critical illness? So Jimmy, maybe you can state your point.
I guess the question is, if you're asking from perspective, must I have it? The answer probably is no need lah.
Yeah.
Suppose if I earn $500,000 but my annual expenses comes up to only about $100,000, then perhaps in this guideline, 4 times of the annual income is a bit too much lah, right? But of course, when it comes to thinking about I could have had a better lifestyle with the full income.
Right.
And with that perspective, covering 4 years of your annual income makes sense. Really. Yeah.
Right. I think it's always like that. When we earn a little bit more, we want to enjoy a little bit more. Our lifestyles are upgraded, and we just want to protect that lifestyle that we have.
Yeah.
Yeah. I think that's the most important in terms of protection wise.
Yeah. And I mean, in terms of falling sick, there are always people thinking about, if I'm sick, actually, I don't need to spend a lot of things. I won't have this lifestyle anyway. I guess what people don't see is that, you're probably not going to have a very, very colorful lifestyle. But the sad fact is that when you're sick, you might want to still have the best treatment.
Right.
You might still want to have the best food that you can take, There are a lot of people I know, they go into organic food, they go to a lot of alternative remedies and stuff like that. So all these require money lah, and only if you haven't lost your income, and obviously in this what we mean is your replacement income from the insurance payout, then only you'll be able to do some of these things I just said lah.
That's right.
Yeah. So, of course, they also, put asterisk say that you should consider term insurance plans for affordable protection. And if you're above 55, you should also review insurance plan every 2 to 3 years to ensure they remain affordable. And one of the key tips here is really to do your planning early into your years so that when you get older, things should not be more expensive. It should be a lot more affordable considering the fact that you've been doing it for very long. And, with also sound planning approach, you should do okay.
That's right.
Yeah. The next one we want to talk about is investment. So here it says you should invest at least 10% of your income for retirement and other financial goals. And you should also start retirement planning now. If you're 55 years old or above, explore the options to monetize your property. Yeah, so they will tell you to consider short-term things like Singapore saving bonds, T-bills, fixed deposit, and the longer term will be things like topping up CPF for retirement savings, extended traded funds, and unit trusts. Yeah, monetization options for the property part of things would be things like silver housing bonus, lease buyback schemes, and also renting at your room, perhaps, or even the whole entire flat.
Yeah. So when should you start your retirement planning? I remember we talked about this before.
When is yesterday lah. Official answer based on the government standard is when you start working, because that's when your CPF.
Right.
Yeah. CPF ultimately was set up for your own retirement sake.
Right.
Yeah.
Right.
So when they told you that from the day you get work, you start working, you're employed, you contribute, it's really the time you should think about planning for retirement ahead lah.
Right. I think, and it's very interesting. I think we recently we attended a CPF course lah.
Yeah.
And I find that CPF is really a very important tools for retirement planning, especially. Without this, I think most of the people, Singaporeans, usually will not have this retirement plan. Okay, because it's quite difficult for us to really set a 10% diligently every month to do that. If it's not CPF, if it's not forced, then this will not happen. And I think there's a very interesting concept in this page. It's called, if you are 55 years old or above, explore options to monetize your property. I think this is not really well talked about. And if you guys are interested, we can talk more about that in one episode if you really want. This is really a change of perspective for us, especially when we talk about you buy property using CPF and then you have to pay back or whatever, right? That's the common thing in the market. But if you see it differently, like in this point, you'll find that actually it's like kind of emergency fund when you are retiring. Yeah. So this is very interesting.
Yep. And the last part would be legacy planning. Make a will and CPF nomination and appoint trusted person. You should consider making a will, CPF nomination, things like lasting power of attorney, advanced care plan. All these things, you can also use the QR code to scan and find out more. But essentially, legacy planning is really making sure that you know where your money goes to and to the intended person you would like. So many times, a lot of people are not very new to insurance, but a lot of people are pretty new to writing a will, going to a law firm to do up your LPA and things like advanced care plan. So I think some of these things are very key and important for us to discuss because legacy planning is ultimately still part of your financial planning route.
Right. Yeah. I just want to zoom in on the will and CPF nomination. So, will, CPF nomination is things that will happen when the person pass on.
Yes.
Okay, whereas lasting power of attorney, LPA, or advanced care plan, it's when the person is still alive. Yeah. So they are very different. And I think LPA is also quite important right now, nowadays especially. When the person is alive and someone has to make the decision. Okay, and if you have many parties involved in one person's life, then it's quite complicated. Yeah. So we should do that before we are not well. Just do all this properly, so that at least when you are really sick, someone will make the best decision for you, Someone who you trust, they will make the best decision for you. Yeah. So all these are something that is not really talked about as well. Yeah.
Well, a lot of risk solutions out there, such as insurance, can help you take away all your risks for financial burdens, right? One of the key things really is to complete the whole entire thing to make it efficient, right? Is the distribution part. You just imagine if someone has a $1 million housing loan, another maybe $150,000 loan on a car, and then collectively this person has $1.15 million of loan. And today, even if your insurance was able to pay out enough, let's say, while this person's alive, the key is many times the insurance payout will only max allow you to pay out how much at one time without any justification of will, letter of probate or letter admin.
100,000
is perhaps the first 150,000.
Yeah.
And beyond that, if you needed more to settle the loans outstanding, you will still need to go to a law firm to do all your letter admin if there was no will. And all these things will take time. If it takes as long as 3 months, 6 months and more, then during the interim period of your time, you have to still find money to service the loans that your loved ones have left behind. Not left behind, while they're sick. They're still there. Not just you have to financially be taking care of them, but now you have to worry about their loan. And every day you'll be thinking, how am I going to settle that out?
Yeah, even their bank accounts will be locked as well.
Yeah, which is why doing up your lasting power of attorney is very important. So it allows your family or your whoever loved ones to be able to do financial decisions such as, taking money from a bank account, pay off your loans and stuff like that. All these are very key and crucial. Yeah. So with this, we hope this bonus episode helps you to understand what's the basic financial planning guide. Until then,
this is Jimmy and this is Simon.
Simon signing
sign off.